All right, everybody. Friday the 28th. Happy sell-off day. We're looking here at the SPY. Let's do a 5 minutes so we look a little professional, but it's a 5 minutes chart for the SPY, looking brutal here. If you can see the picture fine, you can hear me fine. Just a little bit of feedback or we begin right away. All right, thank you, everybody. And a reminder again, you can watch us on Patreon, you can watch us on YouTube, you can leave your comments on Patreon, you can leave them on YouTube, you can leave them in Discord, in the Top Guns chat. I'll catch all of them before the end. But yeah, this is looking pretty bad here. And we have, I don't know if you guys followed the briefs and the tweets that or the posts that I was doing earlier in the day. So if we look here at the SPY, we got a floor at 55 because we have more sellers than buyers, and you have 10,000 here. You have already 22,000 open interest. I'm assuming that more was added today. So the market maker is probably going to try to block it here at 55 and begin to move the tape maybe a little higher at that point. But I mean, look at these gains, right? If you bought the 560 right off the open, you're up 750%. Here, I mean, anemic volume, really lack of confidence. I mean, you look at the OI change overnight. Nobody wanted to buy the calls. Look at all the puts buying here. So the market now is shifting toward, this is a clear behavior of a shift toward the bear market. I mean, if it wasn't clear here, folks, on the weekly chart, and I was talking to somebody yesterday and told them, you look at the 50 weeks moving averages and the indices and the major charts. And if you have consistent closing below, that's going to be your confirmation for a bear market. Then you have to look at the daily charts and plug in your 200. And if you're below that too, now you get a clean rejection out of this. I mean, what more do we need to see here, folks? Right? We're gonna now we have an official bear market going on. That means that we're gonna retest the lows right around here in September, then right around here in August in this SPY, and see which one offers support at that point. But the data, I mean, the data, you think about the data that came out today, it's absolutely horrific. Whether we're talking about the PCE, that's really problematic because you're not getting any relief from the inflation front. And then on the recession front today, we got consumer confidence the worst in, I don't know, 23 years or so. So this is getting really ugly. But for the tape, once again, folks, we talked about 55, probably going to be the floor for today. That was the target for today, 55. And I think the market maker will try to keep us above 55, maybe try to knock some of these big numbers out of the puts. They're going to try their hardest here, maybe to move it 57, 58, just to knock some of these puts. Is there a possibility for an inverse gamma squeeze where we go beyond 55? Sure, there's always. I mean, you have big number of contracts at the 51. You have big numbers of contract 46, but the volume of buying is mostly non-existent here. It's mostly selling. So I think the 55, as far as we're going to go down today, we might even rebound a little above. But this doesn't mean that you have to play rebound bets or anything like that, because the damage here is done, folks. We've lost everything. We've lost all of the moving indicators. We've lost all of the support. We've reversed any attempt for a rebound. Momentum indicators are about to go negative now. And that says that we're going to take the lows and perhaps print lower lows. And when the market looks like this, when you have an initial drop like this, then you have the rebound or the counter reaction. And then you come back down with such aggression like this. There is a moment really soon coming where the market breaks down in a big way. And we might revisit the lows in September really rapidly. So this is something you have to keep in mind. Now we look at the futures. Let's see which, or the map rather. What's working today? What's working is the risk-on stuff. Big pharma is okay. Insurance is okay. Utilities okay. Some of the staples okay, but you got to understand that with the tariffs, it becomes harder for them to make money. So we're even kind of knocking some of the plays in the risk-off portfolio. We're damaging them a little bit as the tariffs talk begin to take over. But I mean, utilities, no tariff. Healthcare, it's a necessity. So that's working out right now. If you look at gold, GLD, but GDX is flattish. I think it's negative. We'll look at that in a minute. But yeah, this is The TLT is up. I mean, all of the behaviors that we need to see to say that we have restoration of recession fear again. So when you look at the 10-year acting like this, right, a major reversal as we see today, on a hotter inflation report, what is the message? The message is, well, the Fed will have to do an emergency now and begin to cut, because even though we have the inflation risk, but right now the recession risk is so obvious that the Fed will have to take the risk and sacrifice the inflation mandate. And that's going to lead us to many more disasters to come. But this is the message from today, folks. And you look at other indicators that we talked about, like the Bitcoin 200 days moving average, that's gone now. You look at the IWM, absolute brutality in today's session, leading the way to the downside. You look at any risk-on stuff getting absolutely hammered, like HIMS, like Palantir, all of that stuff is getting absolutely killed. And what's working out is just some short covering an app. It was down 20% yesterday, but Merck, right, coming back from the sell-off that we got. TLT, AbbVie, J&J, all the stagflation portfolios now making a comeback. So it's clear rotation here to risk off, folks. Which, by the way, would answer a lot of your questions of, hey, do I jump on the wagon here and begin to short? Well, the obvious answer is, after breaking everything, do you need an invitation card to begin to short? Yeah, it's obvious here. You got, if you look at the daily chart, all you need to see is we got a rejection of the 200, took the gap, going to close below the gap. That's all you need to see. But again, folks, let's look at some of the individual charts here. I'm looking at this SPY, 3 minutes. I think, again, 55-ish will probably be the floor for today. But look at the VIX at the same time. Let's see where the VIX can stop, because in the hourly, it's still breaking out. This is the VXX. If we look at the actual VIX, we are past 20, so that's your bearish confirmation. We're probably going to close above 20, so that's going to be confirmation at the end of the day. Then we look at the 2 hours here. We might stop at about 22. We might begin to pull back here at 22, but we close above 20. So the range could be 22 and 20, and we just zigzag back and forth, and that gives the market a little bit of relief, as you can see here. A little bit, just a little. But then you look at Apple. We're losing Apple now. Well, I mean, we're not losing, but the market is losing Apple, because that's below 220. If it closes below 220, then it's probably going to revisit the lows here. So you're probably going to do the 215, 210, or the 220, 210, or you can even go to 200. You can go to the 210, 200 spread if you'd like, but you have to get a longer expiration date. But this is damage right here. It looks like Apple is going to lose momentum again. Then you look at the weekly chart, and it looks here that it's gunning for something such as inverse ABC, and probably going to visit the August lows again. So 200 is on the cards. Even in Apple, and that's not a good look for the market, because at least you need one of the big caps performing. The other one is not doing so hot so either. I mean, you look at NVIDIA here, pretty much in the bag now, that we're going to revisit 106.30 or 106, whatever number you want to pick. This is why I gave you in the options tracker the 110, 105. That's going to be sufficient for next week. If it works out, then we'll do 105, 100, or 100, 190, and give it 2 weeks, but one step at a time here. I think that NVIDIA is just not looking good at all. And the core weave IPO is a disaster. So these are two of the important names, and they're not looking pretty good. Now, you look at another important name like JPM, and that's been just flushing nonstop since the beginning of the day. You look at the daily chart, and now you have the gap right here. If we close below the gap, so I'll give you the close, which is 241.63. If we close below that, then we have further declines to come in JP Morgan. We're probably going to go back to 230 again. And you think about these three, JP, Apple, and NVIDIA, they're supposed to be the ones that are leading any rebound, and they're all getting absolutely hammered right now. Signs of weakness for sure for the market. Tesla, anything we can do about Tesla here? Not really, still stuck. So there's nothing for me. There's more interesting trades than Tesla here, folks. But anyways, this is the dynamic that we see today. Let's see what you guys got here. Good morning, Stefan Stone. How's life? We're doing pretty good. Yesterday I was gambling on basketball, college basketball, and betting on Duke. I think Duke is gonna get it all at the end of the day. And tonight we're betting on Michigan, both Michigans. Anyways, but here in the market, of course, we're betting against everything pretty much. Neil, GM, any bazooka trade now that we got confirmation in the bearish market? So if you're going to do a bazooka trade, you want to go to the indices, right? You want to go to the futures. That's where the actions really is. And at this point, I mean, you want to go 56, 55. If you want to do a spread, you want to do naked, go with 55. Or be a little aggressive, go with 55 altogether. But just understand that you're probably going to overpay right now. So you need either to add an increment later on if there's a rebound, let's say at the end of the day. So you don't want to enter all the position together because you're probably going to overpay with action like this right now. But the trade could be the naked 55. That'll be okay. But you want to be a little conservative, increase chances of profit. Then you do 56, 55, one step at a time because you're probably going to find support at a touch above 55. Now, if you're going to do the NASDAQ, here we're probably going to go to just 19,000, then sell the 18,000. I think that's pretty good because 18,000 you have support right here, which I think we're going to head toward. I mean, no way that we're not going to head down there. So we're going to head down there. It's just a matter of when. So 19,000, 18,000 spread, put debit spread is a pretty good trade in the futures here in the NASDAQ. Let's go back to the SPY as the action now. It's minute by minute, tick by tick. John, thank you so much for joining. Stone, you got the JPM 250, 240. April 11th, you filled the gap. Should I book? You're holding the 240, 235. Okay, so the 250, 240 is done, right? The 250, 240 achieved the target already. Now, what you can do, so you got the 250, that's already in the money. Let's go to the hourly chart right here. You got the 250 deep in the money, good, and then you have 240 that you sold. I mean, you can play cute and keep it if you think that JPM is going to continue to go down. But I think that the discipline says that you're probably going to see somewhat of an attempt for a rebound either today or next week. So that trade is done, the 250, 240. And now what you want to do is, if there's a rebound here, once it fails, you want to add to that 240, 235. For either next week or the 11th will be sufficient enough. And then after that, we're probably going to head to 230 naked because that could be acceleration of the selling. But right now, I would say that the discipline strategy is book the 250, 240, put debit spread, and stick to the 240, 235 for now. Maybe you're going to add to it if there's a rebound. And if it works out, then we're probably going to head to the 30 naked. We're probably going to add the 30 naked right around here. When we break 240, we're probably going to add the 30 naked already, along with the 240, 235 debit spread, just to give it a little bit of a boost, right? If there's a big flush, that's one of the strategies that you do. If you have a debit spread and you think it might limit your gains, you can add a naked on top of it, but only when you have somewhat of a confirmation, such as closing below 240, because you still got this gap right here. Around 240, you need to close below before you have confirmation that we're going to head down in a way that could appreciate a naked 230. Mr. Further downside, MSTR, do we have further downside? Well, Bitcoin is breaking down, so it appears to me that we got a rejection here at 339. It might begin to head down. Yeah, sure. If Bitcoin heads down, you'll see MicroStrategy probably revisiting the lows right here. So around 230. So if you want to short right now, you got your confirmation, because especially if you close below the gap, that's going to be the confirmation that we got a short BTC too, because if BTC closes below the 200, to me, that's a rejection. That's a failure to play any momentum to the upside. And that's going to lead to revisiting the lows and probably breaking below the lows. And that's going to be ugly for MicroStrategy. 15 minutes chart on the IWM looks tragic. The IWM looks tragic at any time frame you can look at, because it is the biggest gap. I mean, there's not even a single tick higher. It just keeps going. And we lost 200 again, so there is no inverse in the shoulder anymore. This is going to be a revisit to the lows here. Whatever rebound it doesn't matter. It's going to come back, revisit the lows right here. So there's a lot of damage, and then you look at the weekly chart in the IWM, and you see that this is here the chart's way to say that I'm only rebounding because I got the Bollinger Bands. But as these expand, I think I want to head lower. I think it once again retest some of the lows in 24 here. I think that the high this week, which is 200, 199.26, that's an important number. If we break that range right around here, it could be fast. It could be really fast where we flush down to ugly numbers in the IWM that folks wouldn't even believe that we're doing that. But right now, lucky for it, it has the Bollinger Bands holding it for now. Okay, that's the IWM for you. Let's go back to JPM because I'm watching JPM. The SPY, no relief. Any pop is just getting hit. Let's see if the VIX here is going to stop at 22 or not. I expected that it might be 55 and then 22 in the VIX. I think those are the limits for today, but we'll see. Hey, Mav, I have MSTZ shares and calls. You have Palantir puts 77, expiration date the 11th. What are your thoughts? So you have MSTZ, that's inverse MicroStrategy. I'd say stick with that. So if you guys don't trade options, you still want to short Bitcoin or MicroStrategy, this is an ETF that you could buy and use it for that. So I'm with it. That's okay. You can buy it here. You can keep it. Palantir, now you have the 77 for the 11th, which is, again, a rational trade. There's no, I mean, you're betting here to go down and close this gap. So I'm with you here. I think you should keep it. You should keep it here at 77. And you have all the way 2 weeks from now, so it's ideal. It's a perfect trade. Keep it as it is. Entire indices were kaput, and I see a short Expedia is resisting to go down. I suspect at this point, at a lower reversal, it'll go up. Shall we close it? I think you're making the mistake of being fixated in one chart, and you're missing the opportunities on all of these charts that we can. I mean, look at the gains that the SPY did today in the zero DTEs, right? So I think you're stuck in this chart here. You got in one trade, didn't work out. Now you got into another, and you're stuck and fixated in this chart right here. And it might go down, by the way, because this is a cyclical. The momentum is coming back down. It might revisit the lows. But I want you to think about it to answer that question for yourself, really. Am I being too fixated in this? Am I like just stuck on this chart right here? Because there might be other opportunities in the market. So that's one thing you got to consider. But looking at the chart itself, yeah, I can see that Expedia can go down further. It can revisit the 200 days moving average again. It seems like the consensus right now that it's heading down there. So if you got to put on it, at least right now, and you have time and you have like 160, for example, I'd keep it. I'd keep the puts at that point. But just, folks, be careful because sometimes we're all susceptible to that. We, for example, pick a chart, bet against it or for it, get stuck, and then get fixated on it, and we miss the opportunities otherwise. You're better off taking a loss and just migrating the money to a trade that's going to work out right away. Okay, if you're on this channel and you're not having fun today, you're on the wrong channel, Bronco. That's right. That's exactly right. I mean, look at Stone. He's loving it here. Now that we have PCE and the dollar crashing, how do you think China stocks will do starting next week? That's a really good question because right now we've at least eliminated the threat of the dollar popping higher. How do we see the Chinese names? They're showing stability. I would not really begin to buy yet. I mean, at the end of the day, this could be consolidation in the bull flag, but you need to see that break. You need to see a little bit of a break above the weekly candles that we have. So, for example, if we trade above 142, I would say, okay, that's as far as we're going to go, and Bob is going to blast higher again. The Chinese names will blast higher again. But you got to remember, the dollar is not the only threat against Chinese equities. There are others too. Stimulus news, if it doesn't come out as the market expect, that could also impact it. But right now, I would say You guys know that I've been eyeing this guy. Am I buying it at this point? Not yet. I'm still waiting, holding my horses, because I think that we have a better opportunity to enter the Chinese market. It'll take a little bit of time, so you have sort of a saucer bottoming here. It's going to take a little bit of while before it begins to move. I don't need to really jump the gun here and rush into it. So for now, the strategy, if you hold China, it's just hedge FXI puts about 2 weeks, a week, and just keep those as a hedge for now. If somebody wants to buy the dip in the Chinese names, I would say start with the FXI because that's your cheapest options that you can spend money on, and just stick to calls for now. Don't buy shares. If the calls work out, then you can convert them into shares and own it in your portfolio. Hey Mav, what should we expect for the VIX in April 4th? There are a lot of bets that the VIX will go higher in April, and I think it's already playing out here. So if we look at what we got in the VIX today, some of the interesting trades. We have the 20 calls for now, but we don't have anything big besides the 18 puts that are showing up right now. So somebody's betting at least on a pullback in the VIX. But if you look at the VIX futures here, and then we look at the options. This is the expiration date of the 2nd, which will be next Wednesday. We already have the calls in the money and they're adding to the 20s. They closed the 24 today, so maybe that's a reason to stall the VIX a little bit. The folks are closing the 24. And then in the puts, we see today they're buying the 20, 19, 18. So they're buying a little bit of pullback in the VIX. Could be indicative that we might, since we're talking about the 4th, right? So the 2nd is the expiration date for the VIX. Could be a pullback, but again, folks, even if the VIX pulls back and gives us relief in the market, the damage is done. So what you're going to see in the VIX is the following, and this is probably what they're betting on. You see sort of a pullback, maybe Monday, for example, but then we head higher again. And in the market, what you're going to see is, if you look at the daily chart, clean this up, might see a little bit of a rebound, then we head back down. So that's going to be my base case assumption here on how the action is spread out in the VIX and the S&P 500. Now, in the weekly chart, where do we see the VIX heading all in all? Look, to me here, it looks to me like the VIX is doing this, where it went higher, and now it's kind of rebounding from a higher low. And that usually leads to a higher high, meaning we're going to trade above 30, VIX 30 again. We know that the VIX is heavily shorted, that if it breaks above 30, you see these kind of reactions, oversized reactions. So we could see in April a big pop in the VIX, but I would say it would probably happen in the second half of April, not the first week of April. After that, it could get the big pop. Anyhow, let's get back here to the VIX. Keep it at the 3 minutes. Would you add this on the bounce? SPY May 16th, 560, 540. Bear put spread. I have this listed as a bazooka trade. I'm in a shorter put spread for the SPY, Qs, JPM, Nvidia, and Apple. These are all good positions. Now, if you want to go with the 540, if you want to go 560, 540, I mean, 560 is already in the money. So I'd suggest that you go on a rebound. Let's say we get a rebound. You probably want to go with the 550 and then sell the 540. So we're probably going to do this. And go into May is okay. And we'll go with the SPY at the 16th. We'll go with the 550. And then we want to sell here the 540. And by the way, if you open them right now, you have to open the spread together because you don't want to overpay for the 550 and not get the high credit for the 540. You have to do it at the same time if you open it right now. If you get a rebound, maybe you can open the 550 while the rebound is going. Then if we begin to come back down, you open the 540 and capture a higher credit. But there's a lot of risk with that because you can have a rebound and then we don't get a pullback by the end of the day. Now you have to sell the credit at a lesser value. So this is not a bad trade at all. This is 40% of profit. The break even is 1.5. You're spending 300 to make 700 almost. That's a really decent return. So this is one of the best trades that we can really deploy right now. So I'd say go with it. Mav, look at NVDS, inverse NVIDIA. Looks like a lot like GLD fractal from 1118 to 1212. Looks like a double top. Batman, then resisting, and up we go at NVDS. So again, NVDS, if you want to buy it, if you can't short or you don't do options, yeah, I'll definitely do NVDS because it's one of the few ones that you got to short NVIDIA. And again, forget about Batman and all of that. I mean, look at this. That's a cup and handle, classic cup and handle, right? So, I mean, it's gonna go higher, that's for sure. And NVIDIA is breaking down. I was having this conversation yesterday with somebody, and they're still long NVIDIA. And I'm like, dude, what do you want to wait for here? Like, what signal are you waiting for? Right? Look at the weekly chart. Look at your 50. When a chart gets rejected at the 50, it's over. It's done. Okay, it's gonna flush down. You got to get the hell out. You look at the daily, you're below the 200 now for how many days? Every rule in the book says it's over, right? You got to book your profits, get out. Don't keep it in the portfolio and then cry later on that, oh, it crashed in my head and all of that. So, yeah, NVDS definitely. If you don't trade put options on NVIDIA, definitely have NVDS for now as a hold in your portfolio. Thank you, Ryan, for joining. And then we have Mav. Do you keep our shorts over the weekend, or is there a... Look, if you have a short, for example, the May trade that we just talked about in the SPY, you don't really give a shit if there's a rebound Monday. Because if there's a rebound, you're probably going to average down, or you're probably going to buy back the 540 at a cheaper price, then sell it again if we go down. There are many maneuver moves that you can do. But you're probably not going to care, because you get a rebound. Let's see here. If we get a rebound, let's say in the, today's the 28th, so 31st will be Monday. Let's say we get a 1% pop in the SPY. Let's expand this a little bit here. 1%. The value of the contract will go down to 250. So you're not losing much on it. And at that point, you can average down if you'd like. So the hedging strategy should not, oh, I got to be worried about my drop plays and take them out, or let me buy some shorter dated calls to hedge, because sometimes that's just going to add to the cost of the investment overall. If the market goes down again Monday, then you just wasted money buying a call for the week to hedge against it. So sometimes the best hedging is as you open the trade. When you open a spread, that's a hedge already. When you pick a longer expiration date, that's a hedge already. When you open via increments, for example, half a position right now, or 75% of the position right now, and you have 25 as dry powder, that's a hedging strategy too. So you got to think about these layers of hedging from the get-go. And I think this is an excellent trade here that doesn't need anything to worry about for a rebound that comes out Monday or by the end of the day today. It doesn't matter. Purple, if we are in JPM, 240, 235 for the fourth, you're saying close and wait for a rebound. If you have the 240, look, if you have the 240, let's look here. If you have the 240, 235, you're sitting at a profit. So if you want to book it and then put it back at the end of the day, for example, if you're worried about this causing a rebound at the end of the day, you can book the profits right now. Let's see how much it's worth. JPM for the fourth, and then 240, 235. So we're sitting at profits here. You can book that profit and then place it again before the end of the day. If you think there's a rebound here, we might go to 243, for example, 44. That's okay. Close it right now, add it again on the way down. So that's what I would do for now. But because it is a shorter dated expiration date, so you have to be a little bit careful with it. But as far as like May expiration dates, shouldn't be worried about that at all. Senior, I made a boss. I broke 220 in Apple. Opened the 200 puts naked for May 16th. That's okay. You can open the naked 200 and go a little crazy if you have May 16th. If you have April, you can't do that. You have to do spreads. It's not too excessive. For May 16th, 200 is not excessive. Looking at 210, 205 or 205, 200 for April 17th. Okay. If you're going to do April 17th, I would do the 210. Let's see here. Apple is trading right now. Even it probably going to try to rebound and touch that 220 again before the end of the day. But the trade would be at that point, I would say go with the 215, 205 for April 17th. So you'll do Apple, not April. And then we'll do here 215, 205 for the 17th. That's a 250 to make 750. That's a decent trade. And then keep the 200 for May 16th as your bet that if we indeed go down to 200, now you have a double on it. This one is going to appreciate a lot, and the spread will be also give you maximum value. Didn't you just open those today? Yeah, we're talking about JPM. Yeah, we opened that today. So if you want to close it right now, just to book some profits, then put it back in again. That's the right way to do it. Otherwise, if you're confident that we're going to go down again next week, then keep it as it is. You don't need to be nervous about it. If you're nervous about it, I would say give it another week. Go with the 11th expiration instead. Should we start entering short positions today? If so, how far out? Or should we wait for a bounce? Do you think we will see harder into Monday? See, this is the mistake of traders all the time. We've seen this repeatedly during these downturns in the market recently, where traders don't make a decision, then the drop happens, and in a tape like today, they look at, let's say, the 1 minute, for example, 1 minute chart, and they think that, oh, the chart is, let's see here, the chart is oversold right here, so I got to wait. I can't really buy any short trades right now. I got to wait for a rebound and just keep going, right? So that's the pitfall of psychology. The traders don't take the decision, and then they get too afraid because, oh, it's oversold, it might rebound. You got to remember, we're shifting now to a bear market. So you will see the rebounds being shorter lived. You will see the rebounds, sure, being sharp, but again, shorter lived. And you will see the declines happening at bigger magnitudes and with aggression where the oversold conditions in the intraday charts don't matter. So how do we avoid this kind of trap? You look at something like the 10 minutes, for example, and you have your support, you have your resistance. Okay, we're oversold right here. But then we got a rejection off the 560. Okay, now I'm going to keep a short or add a short. At this point here, it makes sense to say, okay, now if I got any zero DTE puts, time to close and wait for a rebound before we do anything. But you have to be careful not to get into it too soon. So the longer the time frame, the better it's going to give you in terms of whether the chart is really oversold or not. But if you look at the 1 or 3 minutes, it'll make you commit some mistakes. But anyways, right now, yes, the answer is if you haven't entered any short trades yet, you got to get a rebound before the end of the day. And then probably in the last hour, you want to begin to enter those short trades that we discussed. Mav, look to me, the rollover signal for home builders came today. So home builders, XHB, today, I mean, a lot of recession news today. So you look at the daily, yeah, it's over. We're done with the inverse on the shoulder. There is no inverse on the shoulder. That's a reversal right here. Right, so you look at the weekly chart. Now that's your target weekly chart. You probably want to head down to the 200, or let's say the 100 first. The 100 weeks, we lost that already. So the 200 becomes the target for the week, but you got to go to May. Okay, you got to go to May, and you probably want to go with 95-85 spread or the 90-80 spread, or just short at this point. Short the XHB or any of the home builders that you like. I mean, Lennar is already below the 200, so I am still short Lennar because I think it's the weakest, and it's already losing the 200. If you look at DR Horton, a little above the 200. If you look at Toll, way above the 200. Then you look at Pulte, PHM. That's above the 200. So Lennar is the weaker spot, but all of them have these topping head and shoulder patterns, and they're going to break down and take the XHB further down. So yeah, I'm with you here that we're done here. It's over. I got Apple for April 4th, 215, 210 spread. Do you think I should stay with this or go for a longer expiration? The easy answer here is it might work out in the 4th, but what is the harm in giving it another week? So for example, here we have the 4th, you got the 215, and you sold the 210. Which again, if you're gonna do a week, that's okay if you keep it at 5. If you're gonna do longer, you can extend that. But if you go to the 11th, you're paying about 20 cents more, and you get the comfort of mind that at least you get a little bit of a higher chance of profitability and a little bit more time for maneuver. So why not go to the 11th, even the 17th for that matter, if you want to do 215, 210. And if you do the 17th, you can also go to the 215, 205 that we talked about, and still got a decent chance of profit and higher maximum profit. So up to you, but I would say extended is not that expensive, really. For 20 cents, I'll do it. I'll take another week. Senior Maverick, what are the scenarios for next Wednesday? Tariff happens, market chaos, tariff canceled, market chaos. Is there a silver lining for the bulls, or can we go short with both hands? It doesn't matter at the end of the day, right? It doesn't matter what the tariffs are going to do. The tariffs are already here. Okay, the tariffs are already implemented. The reciprocals, of course, is the one that we're waiting for. But anybody who's betting that somehow, see, this is the problem when they give you this kind of a bullshit market in 24 and 23. The bears become so weak that when they actually get a bear market, they're so traumatized by the rebounds here that they cannot really grasp on it. And when the market goes down, let's say to 480, that's when they begin to say, "Oh, do I short now?" Well, that's too late, right? You gotta make a decision right now. We're shifting to a bear market. All of the signs are here, so the strategy becomes that you have to be aggressive on the short side. The market made up its mind. It's a bubble market, whether we have the tariffs or no tariffs. It's shifting, and the psychology is changing. That's gonna intensify the bear market. So you have to be a little aggressive here and confident that it's turning your way. Forget about being scared about the rebounds. Look at how mediocre the rebounds were in 25. A little bit here in January, but a day and then it frizzles. A day and it goes. A day and it goes. And this is the best rebound that we got so far. Didn't last too long, and it flushed down fast. So you got to be confident here and understand that we shifted to a bear market. So bear market strategies suggest that you have to have longer dated puts and you have to have stronger bets in the puts. Once in a while, the chart gets oversold. You buy calls, you play some rebound plays, but you don't want to waste too much money on them because timing the rebound, if you get it wrong, now you're stuck in a trade, that kind of thing. So the main primary trades that you should have are all short trades. Your long trades are just complementary in the case of oversold conditions for a rebound. Okay, thoughts on Meta, Netflix puts. I'm holding Meta 600. Let's see here. So Meta, you have the 600 puts. That's pretty good. For the 17th, that's pretty good. Let's keep it as it is. Maybe at some point you want to open the 550. You want to open the 550, so you got Meta here. And the expiration date is the 17th. You got the 600. Pretty good value that you're sitting on right now. So if we sell the 550, you net about $9. So that's a decent credit. And then you have a gigantic max profit still. You still got about 50 delta here for a profit. So that's one way to do it. Of course, the other way is to do it diagonal, meaning that you sell for the 11th or the 4th, and you're still going to get a decent credit. So think about it like this, but I would keep the trade, the Meta trade, because it is a good trade. Let's see here, folks. We're probably going to spend a little bit of time here answering all of these questions. So I'm thinking about inviting everybody to watch this. I don't want them to comment though, because That's going to add a lot to it. So I don't think we can do comments by tier. So yeah, that's the problem. Okay. Let's continue here. JPM 230 puts for May 16th. 230, yes, for May you can do that. For May you can do it because 230 could happen so fast, even way before May, but May is the proper expiration date for a naked like this. UNG on fire today despite the negative print. Thanks, Matt, for the great call yesterday. Let's check out an UNG here. Yeah, doing pretty good. See the falling wedge, rather, it's playing out, so stick with it. And much cheaper than Boyle. Hey, Matt, please come to the pre-market action in the S&P and the NASDAQ this morning. After the PC futures fell mildly, then there was a spike. Yeah, I saw that. So that spike is usually folks who shorted and they're booking profits before the end of the pre-market session. That's what it's all about. So you don't want to be thrown off by that because there are folks who just trade the future and then they go to sleep. It's done. Tara, you having fun today? That's what we need to hear. Senior, why is oil not going down hard? Stagflation good for hard assets, even as recessionary sensitive ones? Well, oil is down because we still have recession data today. So oil is reacting properly, but it's not going to crash down, right? Oil is going to hold because still it's a commodity. In stagflation, you're still going to have demand for oil, so it will hold better. It's not going to hold as good as gold or as good as the other metals like copper. Not going to hold as good as some of the softs, but it's going to hold. It's going to hold ground pretty good. And now, if you have devaluation of the dollar at some point, you will see crude moving higher, especially if there's China demand. If China issues more stimulus. I mean, China could kill us right now. If China opens a flood of stimulus, they will cause oil to go higher. And that stagflation problem that we have right now will intensify. So China has a big gun right now with the head of the United States, and they can do it if they want to. So we'll see what happens. You already have a large position in BYD. Just curious how today's action will impact the Chinese. Well, today you got a relief, right? So today you got a relief that at least you don't have to worry about the dollar, at least not right now, because it's not rebounding, it's not moving higher, it's losing a little bit of momentum. So you don't have to worry about the dollar right now. But like I said, BYD has its own conditions because the name was hot. So there was a little bit of a sell the news here. It's holding pretty good. I would still say that I would not be surprised to see it heading down a little more, but at the end of the day, BYD, is it a long-term hold? The answer is yes. So if you're holding on it in the long term, you wouldn't really care because if there are any drops, you'd continue to add. I think that the company is way undervalued, and the significant progress that they've done so far is just nothing short of impressive. They need the valuation to expand even further. Mav, I have the EWG. 37 puts. EWG is, I believe, Germany, right? Yep. So we have the 37 puts. I agree with you that it got a little too hard. There's a big volume today. And look, I know a lot of managers are talking about Europe as an exception and all of that, but it was because of the dollar going down. At the end of the day, Europe is so tied to the United States that if the market of the U.S. begins to go into bear market, all of the European markets will react in following the U.S. market. They're not going to be able to be the exception. China equities, Japanese equities, that's a different story. They can be the exception. But European equities, I don't think they're going to be the exception for too long. They're going to come back just like the U.S. market. So if you have a short on it right now, I'll keep it as it is. And the 17th is a pretty good expiration date. No one. What should be our VIX long-term target? Should we buy out-of-the-money calls, 50 or 70 strikes? Well, you saw that they're closing some of the VIX contracts, right, for next week. So maybe your timing is a little bit wrong. Maybe you want to do it Wednesday, after Wednesday. Because Wednesday is going to be expiration date for the VIX. So maybe next Wednesday you want to do it, and you want to go with the 30 this time around. You don't want to go to the 50 or 70. 70 was the wild trade. Maybe we can add it later on if we continue to hold above 20, but I think the 30 or 35 will be the proper one. But let's wait. If you're going to do the VIX, let's wait till next Wednesday. Right now, focus on the SPY. For a big bearish bets, which expiration date's better to choose when opening puts? I took today 217 in Apple, 207, the 11th puts. Okay, if you're going to go 2 weeks or a week till expiration, you have to be really close to the money. Now, if you want to go with longer dates, so I gave you some ideas for May, right? For May, you can open SPY spreads, the ones that we talked about just a few minutes ago. Or in the queues, doesn't matter. So you can go to May's expiration, and then even if you want to do it in the queues, we're going to have the same expiration date here. For May 16, come on. There we go. In here, we'll take the typical 5% kind of correction. So we'll go with the 460 and then sell the 440 or the 445. Decent chance of profits, wider margin, decent chance of profit, bigger maximum profit. That's up to you. These decisions are up to you. But you want to have 10 or 20 delta. You don't want to go 5. That doesn't make sense at all. If you can go 5, you can go to shorter expiration date. And you get closer to the money. But think about these trades for May because they're not really that expensive and they have really good chance of profitability. I'm worried about holding on put trades for the 4th over the weekend. If there is a pop Monday, theta will kill. Yes. If there is a rebound, sure, you're going to lose a lot of value in your weekly. So the question is, if you made profits, maybe you want to close them, roll to the 11th. That would be the proper way to do it if you're worried about that. I'm net short positions in 80% cash. Do you see any rebound that would spoil the bear party? Folks, we are heading into a bear market right now, if not already in one. Okay, so you got to let that fear from the last 2 years go away. Otherwise, you're not going to be able to trade this market and profit from it. There's a different dynamic right now. So we're in a bear market. You have to be aggressive. You have to deploy the cash. You have to begin to short stuff that is way overvalued, doesn't make sense at all, that will get hit in a recession. You have to be aggressive now. Is there any short or put conviction trade for next week? Liberation Day next week. Hooray. Do you see any Trump tweets spoiling the bear market? Nope. It doesn't matter, folks. Let's not concentrate on that crap. What is he going to do? He's done, right? He put himself in a corner. He's done. I said before the elections even that he's the nail in the coffin. And before the year began, we're going to head into a bear market. Doesn't matter what he does. Doesn't matter what they do. The damage is already done here. The psychology changed. And that's what really matters. So you have to be aggressive in your bearish bets. And you do risk managements via when you get like oversold conditions in the hourly, for example. Sure, you can buy a weekly call to hedge against it or book some profits, redeploy again. You have to be dynamic. You can't just buy one position and stay and just watch the chart. Do whatever it wants until expiration date. If you understand those, you're gonna do fine. You just don't be scared here to deploy the cash and profit from the opportunity that we see right now in the market. Somehow you don't have TM, you don't have access to futures options. How would we play shorting the E-mini futures? You can just pick the SPY. It's the same thing, right? It's going to be cheaper. E-mini futures will cost you a lot. So if you want to spend like thousands of dollars, you go with the futures. There are some advantages, but not that significant to a retail investor, really. So you can go with the SPY. Gabak, I tried many times to submit my name in the end credits. It does not work. You a change in the name? Because your name is in the credits. But if it's a change in the name, I'll catch it. Are we in a bear market officially now? I think so. Thanks, Mav. Have you decided regarding AGQ? Also, what do you recommend doing with gold? Right now, gold is just hold, hedge from time to time. As far as AGQ silver, a little bit of a pullback here. You might get, let's look at SLV. Might be a little more where that came from because I think that gold is also a little on the weaker side today. Yeah, it's kind of looking toppy here. Not on the weaker side, but a little bit toppy. Outperforming silver, so right now I would say gold, stay long. But you got to hedge because at some point, I think if this fear continues, they're going to shift to the safety of the dollar. And if they do that, then gold is going to get smashed. And that happens. Go back to '07, you'll see the same thing. I don't know if this chart is going to show it or not, but there is a moment here. Yeah, we can see it. See, all the way through 2008, gold was a fantastic performer where the market was a lousy one. But then it also got hit with that consolidation in the market. It rallied as we got closer to the crash, but once we got the bad news, it did crash along with the market. So at some point, you got to hedge against gold. But right now, we stay long. And silver, we're just going to accumulate in the pullbacks for now. Pullbacks, you buy silver. But honestly, between silver and gold, I'd rather go with gold because silver doesn't have that reputation or reliability under these circumstances of recession and all of that. On top of that, you have the central banks buying. You have big players buying gold. So I think that if you have gold, you really don't need silver. At least I don't. I have some silver coins, but not really a significant portion. And I don't own any SLV or any silver exposure. I got mostly gold and copper. So think about the redundancy here that is not needed. Is Bitcoin heading back to 71K? Perhaps. That appears likely, right? Because it's below the 200, and then the low here was, so the low would be the first target. It's going to be about 76.55. Then after that, if we break it, yeah, we'll go down to 70 because there is a little bit of support here that we have to deal with first, around like 76, 75, a little bit of support that has to be broken before you see 71. What trades are you eyeing on right now? I'm adding to my SPY April 4th, 555, 550. That's okay. So if you're going to do April 4th, you have to keep it at a 5 delta and really close to the money. So that's okay. Let's see here. Yeah, that's a good trade. That's okay. But I would say, look, the problem is with the shorter expiration date that you could have the right bet, right? You could bet against the SPY, but comes Monday, it's back at 560 and decays your trade. And maybe it trades closer after that to 555, but it doesn't really break it. And you end up losing on a trade that later on plays out handsomely, right? And that's the trap of shorter expiration dates. You think you're saving money by not spending much on the premiums, but if your timing is wrong, you could actually ruin a good trade, a good idea that could have worked out had you given it, like, let's say 2-3 weeks, more than you think. So again, I would say that I understand the appeal of shorter dated expiration dates and the spreads at 5 delta. I'm doing that too for next week. I just shared some trades with you from NVIDIA and JPM. We all do that. But if you're going to deploy serious cash in put options trades, I highly suggest that you go at least 2 weeks from now, if not even May, and use those spreads ideas that I gave you, because sure, your profit is going to be defined, but the way to maximize your profit in the spread is to add a naked to it at some point. So let's say you have April 17th, you have a put debit spread. Then you can add, for May, you can add a naked below the spread that you got. I'll give you an example so nobody's confused here. Let's go to the 17th and do, let's say 2.5. So 65 and then sell the 55. There we go. So here, this is a trade for the 17th against the Qs, spending 300 to make 700 almost. Nice chance of profit, 39%. But what if there's a crash? What if there's a big flush? Here, we're going to add another put, maybe at 440. But we're going to give it a little more time, the 16th. Right? It's going to cost you a little bit more, but in certain cases, like in the individual names like JPM, or it'll cost you less. But here, because it's an index, so it's adding to the cost now. How can you mitigate that cost later on? If the tape goes down, then you can open a spread later on and reduce that cost. So, but this is a popular strategy for option traders when we see bear markets like this, that you have a spread with defined targets and then you have a wilder bet. And it could be, by the way, it could be like this. Keep this 465, 455 puts for the 17th. Then you add your wilder bet. You add it for May 16th and you add SQs instead. So you do calls on the SQs. And you can go a little outside of the money. You can go to the, let's see here, 40. It's a little too expensive. So 43 or 45, and that's going to be your complementary trade if there is a big flush in the market. Okay, so the VIX is retreating from 22, giving the market a little bit of relief here to try to rebound, but we know that the buyers are not showing up anytime soon here. Hey, Mav, what are your thoughts on seeing a short squeeze Monday morning to 570, 575? Why? Why would we see a short squeeze? Why do we have a technical breakdown? What is the catalyst for a short squeeze? I just don't see it. I see maybe an oversold rebound, but I don't see 570 or 575. I think that we're done with that. That's the chart speaking right now. The chart is saying, no, I'm done with that. If the chart wanted to go to 570, 575, it would have done that right here, but it gave up. It broke down. It said, I don't have any support. I need to seek support. So it's going to continue to go down until it finds some support. And if the support comes out from the shorts booking profit, it's not going to be enough. It's just going to give you a temporary rebound, and then we go down. So it's important to look at the sentiment also. And I'm talking to a lot of like retail investors who are, let's say, a little bit cocky in the last couple of years, like, oh, everything goes higher, you don't understand. And they're kind of nervous about this. Like, I'm not adding anything anymore. I'm actually beginning to sell. So when you see that kind of lack of confidence, it tells you that you got to be careful that for now, we're not seeing the buyers showing up at all. How long does the last bear market? Last bear market lasted for a year. It was 22, and that was it. But it's different circumstances now. We could have a longer bear market. Is NSP a short? Bear markets, by the way, usually last 1 to 3 years. They're not really long in nature. NSP, is it a short? Maybe you got topping in his shoulder, right? Maybe that's what you're betting on here. Bear flag. So you have all of the technical indicators that would suggest that, yes, it is a short. So I'll take a shot against it. I'll take a shot against it if you want to do a short here. Is MCI good long? Of course not. Of course not. All of the chips are coming down, so SMCI will go down with it. SMCI just goes up because of mechanical reasons, because folks are buying calls if they're short covering. But no, it's a garbage name. You don't want to buy it. For Expedia, only down 99 or 1% today. I don't think that's weak to short. It might go down later on, though, right? So the chart doesn't look good. It suggests that we have a revisit to the 200 days moving average. So if you have a trade with enough time, I say keep it for now. But also think about other trades that you could be doing right now. And if you find a better opportunity, maybe it's better just rotate out of Expedia. Still have some positions in cyber defense software like CrowdStrike dumped together with TSM, Zoom, Meta, Amazon. Last few positions I thought might hold, yeah, unfortunately, especially Meta is not going to hold. Zoom is not going to hold. Amazon not going to hold. Taiwan is over. CrowdStrike maybe, but CrowdStrike is overvalued in cybersecurity. So the name that I'm keeping is Okta, but even Okta is going to get hit in a session like we have right now. But CrowdStrike is really overvalued, and it's a worse looking chart. It's sort of a topping in a shoulder or like an inverse ABC. So if you want to do cyber, I would say stick to Okta for now, not CrowdStrike. That's the one that I got. SPY, pathetic. The VIX is coming back down. Come on. When is it time to short the Palantir scam? Short. We already talked about that a few streams ago, like a few weeks ago. We talked about Palantir. And I told you guys the short that I'm doing, which is only 20% of the position when we got this bearish engulfing candle. So we're probably going to do another 20 here. So if you want a short, this is the time. Topping, head and shoulder. On a rising, which is a little stronger than, let's say, declining head and shoulder. But it doesn't matter. I think that at the end of the day, we're going to revisit the lows right here at 65, break below, close the gap right here. And maybe Palantir will settle at the 40s, 30s at the end of the day. So you got plenty of room for a short in Palantir. Is copper a good long? Absolutely. Yeah, copper futures, but let's wait for a pullback, though, because copper is a little too hot for my taste right now to chase. Let's wait for a little more pullback, that momentum to cool off a little bit, then maybe if we revisit the wick right here, it'll be a good buying opportunity at that point. But you definitely need to add copper in your portfolio, or palladium at least. RTX looks like it's going to break down. RTX, daily chart. It's still a good looking chart, by the way. It's still trading at all-time highs and making higher highs, see? Higher lows, higher highs, right? So it's looking pretty good. Maybe it's going to pull back to make another higher low. So not a chart that I want to short. You want to short the weak, not the strong. You have Disney 95 puts for the 17th. Hold or create a spread. Disney, I would say, let's keep it as it is for now. Let's keep it as it is. 95, keep it as it is. If we break and close below 97, then you can open a spread. But I think right now you have the bear flag playing out. You're good to go. Leave it as it is. If we have to buy companies, should we buy stock with low beta? It's not really the beta that matters. It's which sector you're buying in. So again, I have somebody right now who's like a former client, been texting, and she says she's getting wrecked in the market. And I'm like, okay, what are you holding? And she has Hims, Robinhood, Grab. I'm like, okay, that's the kind of shit you want to short. You don't want to be long in this stuff. You want to be long pharma. Grab Amgen, grab Gilead or J&J. Then grab some utilities. Grab some of the staples right here. Buy Verizon. That's the only thing you can do here. So it's not really a beta kind of positioning. It's which sector that you can stay in right now. And of course, GLD in either gas or oil will be okay for now. VIX continues to head down, but we're not seeing any relief here showing up, and it shows the weakness of the buyers today. Everybody's afraid to buy. When all the biggest bubbles like Tesla, PLTD, PLTR, all similar will become a short, there are a short, okay? There are a short. I mean, come on, folks. You gotta get it together here. Look at the Tesla. I mean, this guy crashed by 50%. It was a short right there. It's a short here again. Palantir is a short. NVIDIA is a short. I'm saying it right here. NVIDIA is a short, right? Short. You gotta take action. You can't wait till stuff goes down 50% and then we think about shorting it. Why does it seem that NVIDIA does not want to go any lower than a 101? Because there is still a little bit of belief that, hey, NVIDIA was good. It's been holding. I just shared the story that yesterday I was talking to a former client, and she's texting me right now. But I was talking to her, and she was saying that I still hold NVIDIA. I'm like, you got to sell that. You got to book that profit. But it was hard to convince her because, but NVIDIA's, hey, what about AI? What about this? What about that? They still believe that garbage that they hear on TV. But at some point, the whales are going to sell, push the price under a maximum pain for the holders, and then everybody rushes to the exit door at the same time, and we see bigger flushes in the name. Mav, I'm slightly new to the U.S. economy macro stuff, if I understand. Is it mainly built on the dollar monopoly and money printing? In your view, how long can it sustain as population and unemployment move up? Not too long. I mean, we're already facing challenges right now with the dollar losing status. And in the next crash, that's going to be a huge test for the dollar. Would the dollar value go up, as we've seen in the last crash, where folks assume that the U.S. dollar is a source of safety, or would they abandon the dollar altogether and go with gold? That's a really important thing to watch in the next crash. If they go to gold and abandon the dollar, that's going to be a huge problem for this country in the long run, because it means that the country lost its power, which is the domination of the dollar. And that could lead to many other things. Folks talk about BRICS and all of that, but that's only going to happen if there is a crash and the dollar doesn't appreciate, because that's going to shake the faith and confidence in the U.S. dollar. But yes, the only reason that the U.S. economy didn't face a lot of the troubles that other countries faced is because we can print money with impunity. At least for the last few years. Now we're facing the consequences via inflation. But we can only do that because of the domination of the dollar. You can't do that if you're like currency that is weak or not relevant anymore. Okay, Naked Bazookas for May. OCK Cult for May. Mav, on Discord, there is a guy talking to me with your tag, pretending to be you. No, that's a scam, okay? That's a scam. Don't, yeah, they get in, they have the logo, and they try to poach some of the members that we got for scams. So you have to be careful. And I tried to block them. I try to block them all the time, but you can't catch them all. And Neil, you have the NQ, 18,000 puts for May. You're up 60%. Close, re-enter, or open a spread. So if you have the NQ for 18,000 right now, that's kind of a bazooka trade itself here. And I would say keep it as it is. You don't need to open a spread right now. You have enough time till May. It's a good trade. It's working out. Let's keep it as it is right now. If we break 19,000, I would say yes. Maybe you want to open a spread or consider doing something. But right now, it's a trade that you don't need to be afraid here. Stick with it. Make 100, 200, 300%. How do you hedge physical gold? The only way you can do it is to have some holdings once in a while, an inverse gold ETF, like or gold miner ETF like JDST or DUST, or maybe puts on the GDX, puts in the GLD once in a while. That's the only way to hedge against physical gold. But again, you don't want to pick on gold too much, because even if it dips down, it usually comes back up again. So there's only one time when you have to hedge against gold, which is if there is a crash and folks shift to the ultimate safety of the dollar. When that happens, absolutely you have to hedge gold because it's going to crash too. But that was before. We haven't really tested that dynamic for over, I don't know, 17, 18 years now. So who knows in this crash, would the dollar really hold, or would folks just go with gold? So that's a conversation that I can't really predict too much into it. What is the difference between bear spread and just buying puts instead? Bear spread is you're doing a debit spread. You're buying a put and then you're selling a put underneath it. Just to lower the price. It limits your profit, but it lowers the price, increases the probability of profitability. When you buy puts, you're just buying naked puts, which sometimes it's a good strategy, but in most times it's not. You buy naked calls, you don't buy naked puts, at least in the bull market, but now we have a bear market, so you buy naked puts, but you have to give them time. Can we open both Apple and NVIDIA puts? NVIDIA 105, May 16th. I am with that, yes. NVIDIA, I think it's heading down to 105 for sure. Hey, Mav, looking at Palantir, 85, 75, that's good too. For the 17th, that's good. That's a really good spread. See here, Palantir, 85, 75. That's a good spread. That's one way to structure the trade and still having a 10% or 10 delta, which is a really nice profit. And then you have support here around the 75, right? So the trader is buying the 85, selling the support. So that's a buy and then sell. And your profit is the difference right here. So that's how we do the spreads. Okay, Mav, I did 22K while talking about the market bottoming for today. Got the SPY 556 calls. In, out, hello, goodbye. Good for you. Although it's kind of a pathetic rebound, to be honest with you. I thought that would have a little bit of volume in it with the VIX coming back down. We'll see what happens at the end of the day, but really weak today. Is the SPY better than the IWM for puts? It depends on your preference, really. If you think that the big caps are the ones that are going to get hit, then the SPY or the VIX is going to spike, then the SPY makes sense. The IWM also makes sense if you have movement in the bond market. So it depends on the preference here. Senior, can we do long-term puts like 6 months to mimic the short, or do we need to do synthetic short futures? You can do 6 month puts, but you're not going to mimic the short because the short already placed their bets. So in Palantir, if you shorted here, you reserved your short at this price. If you have a 6 month put, either it is exactly at this price, or if you go outside of the money, and 6 months later it breaks below, you're shorting at the strike price that you pick. And if you pick 6 month puts in the money, it'll cost you a lot. So might as well just short if you're going to do that. Hey, Mav, I want to go long defensives, but I was wondering, is it a good idea to wait till October? Why? I think could be a huge crash that would sell off, but right now you want them to be, because we have risk off, right? And these stocks, I mean, year to date, so if you thinking like that, you missed a lot of gains in these names, right? So double digits in big pharma. The utilities are up. Oil is up pretty good. The miners are up. Look at some of the staples here are up. Verizon, AT&T. So you want to stay long on them because I don't think the crash happens maybe as we hit to September, October, but we can manage at that point. We can sell and manage at that point. In the meantime, you need exposure. I meant short naked. MicroStrategy gapping up as we speak. BTC might rally over the weekend. I don't think so. If the sentiment doesn't change, I don't think so. May 480 SPY puts. 480 is a little crazy. Okay, 480 is a little like you're going too crazy here. 480, no. I would not do that. What is the difference between the SPY and the SPX? SPY is the ETF. It's not the cash index, right? So it's the most popular ETF that traders do, but that's on the retail level, of course. On the institutional level, it's the cash index. So that's the difference. That you have S&P cash index, and then you have SPY, the regular index that you can trade. Not a big difference really, except in the preference from an objective perspective in trading. It doesn't really make any difference if you go with SPY puts or SPX puts. It's just a point of preference of which one do you like and you're used to trading. OCK Cult 520 SPY. I would not go that far though, because you're betting on a crash. It might not happen as you anticipate. You're better off doing the spreads that I talked about. 550, sell the 540. 550, sell the 530, right? You're better off doing these trades. You'll make a lot more money in the downside doing these spreads rather than going way out of the money and then, let's say you go down like this and it appreciates in value, that the one you got right here, but then you see a rebound and boom, that it goes kaput. And then what do you know? Next thing you know, market actually goes down. But because you bet on a put option way out of the money with shorter expiration date, it didn't work out. So there's no point of wasting money here. I'd rather go with the spreads, something that is guaranteed to work out. Merck shares or Merck calls for May, June. I'd rather go with the shares because Merck calls don't have a lot of volume. Neil. And by the way, you don't have to go with Merck, right? If you like Amgen better, go with Amgen. If you like Gilead better, go with it. Sanofi could be a better choice, right? Because maybe Merck has some problems, but Sanofi doesn't, right? So it doesn't have to be Merck. It could be also Bristol Myers, if you'd like. Neil, you got the 1,700 puts for September. Yeah, if you have 17 for September, that's okay. Keep it. Don't open spreads right now because you're good to go. When things get oversold, that's when you want to open the spreads. Right now, keep the positions as is. Here's the SPY, folks. Again, not really rebounding, which is indicative of the problems. By the way, small family office, I know you're not with us right now, but the earthquake yesterday was, I saw some of these pictures, unbelievable really. So we hope that you're okay. You can join us again soon. Mad Hat, I got April 17th, 175 puts for AVGO. You're up about 70%. Should I book profits, roll down, or just hold and maybe buy some short-dated calls? You got the 17 for 175 for AVGO. You're already in the money, so you could actually sell the 165 and open a spread. You could keep it as it is for a little bit more because you still got time. You got all the way to the 17th, and the market is weak. Even if there's a little bit of a rebound, not going to hurt you a lot. So either open a spread at 165 or keep it as it is for another week, and then you can close it. If there's another drop, let's say Monday, Tuesday, close it at that point because it's going to be way outside the bands. Now, another way you can deal with it is book the profits in AVGO and then rotate against NVIDIA with the 110, 105 or the 105 puts because this one still got room to go down to the lower bands. So these are your options. Hey, Mav, you always tell to short the weak. Why not shorting a weak bank ticker instead of shorting the best like JPM? When we talk about short, like a trade for a week or two, we're just betting on a pullback here on JPM. We're not really picking a short. And when we talk about the week, that's subjective, right? So if my horizon is 2 weeks or next week, Yeah, it looks weak here. The chart does look weak. JPM. Because weaker rebound, bear flag, breaking down, probably going to get a little bit of a rebound, then come back down again. So depending on the time frame you're eyeing, it is weak. But if you're going to short, let's say 6 months from now, or open a short position, yeah, you want to pick on the weak, not the strong. In the fallacy that I'm trying to address when I say that is sometimes traders look at the tape and they see everything down, but then they see, for example, oh, NVIDIA is outperforming or Apple is outperforming, so there's a lag. And maybe Apple is going to drop down and catch up with these guys. That's a fallacy. It doesn't work out that way. And it's a trap. Something is strong, relatively strong, that's for a reason. You pick against the weak that is breaking down, not something that's relatively outperforming. I think that's the point that I try to make. Wheat looks like a print bottoming tail. Is it a good time to buy? I'm waiting on it. I'm waiting because I'm not sure that it is a bottom yet. It's looking okay right now as a tail candle that maybe the pain is done, but I want to see confirmation because it could be just, hey, we got outside of the bands. That's it. But I want to see a little more before I begin to add. Now, if you want to average down, it's a good point to average down. But, I mean, you could have averaged down here, and then you went down to a lower price. So it's a good point for averaging down, but keep some dry powder. This is going to take a long time to build up this position for it to work out. Folks, we're kind of late for Discord, folks. We got to serve them too, so I'm going to switch to Discord here in a minute. But let me give you like a final thought here. Thank you, everybody, for joining. Phil, on Patreon, you say, quick question. Is the 230 pit close still a factor, or have the computer trades completely taken over? I mean, right now, it's pretty much algorithmic, right? So what we see in the tape today is a lot of it is algorithmic because I don't see the retail investors. I don't see any footprint of even the regular trading desks buying because they should have when the VIX went down, but I'm not seeing it. So I see that the algos are doing the majority of the work here. And they're looking at the hedging activities that are showing up and just dropping the indices down because technically we are oversold. So usually if you have the trading desk going on, they would have bought the SPY and tried to push it higher. But because we have the algorithms just reacting with little volume, so we see oversold conditions persisting here. Like I said, folks, the VIX, if it passes 22, we got another leg down. If we stay below 22, they're probably going to give it a shot to try to move the SPY a little higher above that 55 number to eliminate that risk, maybe the 58, 59. They're going to try to do that at the end of the day. But that's only dependent on the VIX moving above 22. If it stays below 22, then I think that we have a rebound at the end of the day. A really mini, tiny rebound. But with that, folks, thank you for joining us for this session. We will be back on Discord in a minute. Let's address one here about Exxon and then FCX and then end it. So Exxon, is that a short? No, it's not a short. Exxon is part of the stagflation portfolio. It's a pullback trade. Maybe you can play the 115 as a pullback, but it is a buy. So we won't short the FCX. We won't short Freeport either. Freeport is a buy, but better to exercise and sell the FCX 40 or buy the shares back. If you have the puts right now, you don't want to buy at 40 because you don't have the floor yet. So I'd say keep the puts as is for now. Now, if you have the 40 with the expiration date of this week or today, then you have to, right? You have to exercise and just buy at 40 or just book the profits, keep that money in your pack and in the sidelines for next week. Maybe you'll get a better buying opportunity at 37, 38, right? So that's what I would do. Just book the profits from the puts and keep that cash so you can buy at a lower price. But with that, folks, let's just wrap it up right here, and we'll be in Discord in about a minute or so. Thank you so much for joining. Appreciate all of you.